Hope everybody out there is doing well. Let's get started. Okay, just going through posts that are already up here. Okay. All right, so welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street. All right, we had a great first session. During the first session, we discussed numerous things, including the US dollar index. We discussed pound yen, which you see in front of you, of sort of a long-term setup, but really not necessarily, because pound yen can move 100 pips really quickly. By the way, I want you to know everything on here that I do is color-coded, okay? So I always write the entries in green, the stops are in red, the targets are in dark blue, and if you see a number in light blue, that's something I began including recently. If you see a number in light blue, that means that if you haven't already moved the stop, you have to move the stop when it reaches that point, you know. So obviously that assumes that the trade is going in your favor, right? We don't move a stop when the trade is going against you. We only move a stop when it's going in our favor. So anyway, that's what the color coding means. Also, nothing that I say should be construed as advice. I'm not giving recommendations. I am simply showing you live trading strategies in the live market. And what you do from there is completely up to you. All right. All right, so pound yen is where we finished off there. We also had a little setup for dollar CAD, so I'm going to flip back over to dollar CAD. And we were on the 60-minute. And did you see that quick move down that we're looking for? The low of that move is 17. We missed it by 2 pips, but do you see the way it came down to support? And now it's bouncing back up, and it's almost back up to 131.30. I mean, that's a great way to catch some quick pips. Okay? That's a great way to catch some quick pips. So, you know, hopefully, hopefully that's something you were able to do. But as for me, I had my entry at 131.15. I keep saying 113. It's 131.15. And that didn't, it never caught the entry there. It just missed it by 2 pips, and now it's doing exactly what we expected. It's turning and going the other way. I'll show you that on a 5-minute. All right, so sort of zoom in here. And there you see the sharp move in one direction and then the reversal. That's exactly what we're trying to play with this strategy. I'm canceling my orders now because I missed it. And if you miss it, you missed it. There's nothing you can do about it, all right? So you don't worry about it. All right, you just move on to the next one. So that's kind of been the theme this week, right? We have 1 entry and 3 missed entries. No losing trades, no stop outs, but it's been that kind of a week where you put your you try to catch a fish, but the fish just swims right up to the bait and then turns around and swims the other way. And that's the way it is sometimes, and that's you've got to deal with it. Okay, let's move on, right? So let's start talking now. Aussie CAD is something we spoke about as well during the first session. There's the daily. Look at that candle just keeps getting longer and redder. So Canadian dollar strong against Aussie. How does Aussie look against the greenback is a good question. Now, this was a chart. We drew this up earlier. I really don't like this type of pattern for trading. I don't think it creates reliable trade setups. What we have are lower highs. Here's a high point from early December, and then a lower high early February. We also have higher lows. Here's a low point in January and a couple of higher lows in February. Okay? And so higher lows and lower highs equals a whole lot of nothing. All right, so listen, read all the books, and they're going to tell you that you're supposed to buy it if it breaks the higher trend line, and you're supposed to short it if it breaks the lower trend line. I get that, and that has a logic to it. That makes sense. But you know what? It just, in reality, it just hasn't worked out that way for me. Maybe you'll have better luck with it. But it seems to me like it's a pretty random kind of setup. This thing has no direction to it, and therefore it has no catalyst. It needs a catalyst. It needs something to happen to create some activity here. So we're going to leave it alone. We're going to move on. So we talked about Aussie USD, we talked about USD Canada, and we talked about Aussie Canada. So what about Aussie New Zealand? Whenever I look at Aussie Canada, it's hard commodities versus hard commodities. Australia and Canada are very similar. The main difference being that Canada is a big oil producer and Australia is not. So if Aussie Canada is making a big move, there's a good chance that oil is somehow related. Hey, look, it could be central bank related too. Okay? All right. So let's take a look at Aussie New Zealand, because Aussie New Zealand, it's not hard commodity against hard commodity. It's hard against soft. Soft commodities, meaning New Zealand is basically like a big farm, whereas Canada is like a big mine, a big oil well, let's say, and a big mine. So Australia's a big mine, Canada's a big mine with an oil well, and New Zealand is a big farm. But do we really see anything here? I want to zoom this for you. Let's go to the 240 minute. This might be a shorter term setup. Let's even make it, let's go 60. Just waiting for the chart here, folks. Just waiting on the chart. Going to Aussie New Zealand 60 minute right now. And of course, we're very hopeful that that will come up soon. Wow, this is taking forever. So what factors would move Australia versus, there we go. Australia versus New Zealand on the hourly, I think it's a lot clearer what's happening here. I would say resistance, because you hit that line twice. Once at the end of January, and once in the middle of February. And also you came close to that line on numerous occasions. So there's a lot of selling pressure in this general area. It's pretty close to 105.50. Pretty close to there. But not quite. It's a little under 105.50. And in addition, right now, we definitely have some support down here too. It's a little sloppy. We could go all the way to the bottom here. That's about 103.70 on support. So support and resistance, it looks like it's 105.50. To 103.70. And this is on Australia, New Zealand. And this is a 60-minute chart. So how far apart are, it's 180 pips, right? So I've got a 180 pip range. Between support and resistance. So how can I use that? My entry, so take 180 times 0.1, 1/10, you get 18. So 18 is the magic number on this trade. 1/10 of the range. Let's see how that works. Entry on the short, on the long side is 18 pips above 103.70. And I'm focused on the long side just because we're closer to it. If we were closer to the short side, I'd be focused on the short side. But 103.70 is support. Let's add the magic number, which is 18. That's 1/10 of 180. Add 18, and it's 103.70 plus 18 gives you 103.88. 103.88 is the entry point. Let's put it in green. $103.88. Now the stop goes 18 below support. The entry is 18 pips above. The stop is 18 pips below. The magic number is 18. So what is 18 below? You take 103.70 minus 18, and you get 103.52. And 103.52 becomes the stop. Last of all, we need a target. Well, we know resistance is 105.50. And we know the so-called magic number is 18. So 105.50 minus 18 is 105.32. All right. So 105.32, 103.88, 103.52. Everything is color coded. The entry is green, the stop is red, the target is blue. But I want to also consider something else. That's just one target, and it's a 4-to-1. I think it's 4-to-1 reward to risk. I know my risk is 36 because that's 18 plus 18. So I know I'm risking 36 pips on this trade. All right, so my risk is 36. My reward is 144. The distance from the green number to the blue number is 144. Profit versus 36 risk. Now that's going to be about 4 to 1. But I'm not done yet. So far so good, but not good enough. Let me explain. You see, sometimes the price makes it all the way. Let me zoom in on this. Sometimes the price makes it all the way up to resistance, and sometimes it doesn't. Sometimes the price makes it all the way down to support, and sometimes it doesn't. So what are we going to do about that? Well, I'll tell you what. The halfway point between support and resistance can also make an excellent target. Let's examine that idea a little more closely. The distance between support and resistance is 180. That's the black numbers, 105.50 and 103.70. Those are support and resistance. 180 is the distance from support to resistance. Half of 180 is 90. Let's put a target halfway between support and resistance, because very often, look at these two peaks here. Did we make it all the way up to resistance? No, we came very short. So let's make an easier target that's halfway between support and resistance. Very, very simple. Instead of 180, make it 90. Let's add 90 to 103.70, and we end up with 104.60. And I like this a lot because that puts this target under these peaks up here, which could also, these peaks could be considered a resistance area of their own. Okay? So now I've got, let's get it right up, bring it down a little bit. And now it's really, now the trade is really coming together. We've got our entry and we've got two targets. Now, I know one of my targets is 144 pips away, which is about 4 to 1, because my stop is 36 pips. How far is my entry from my target this time? Well, 104.60 minus 103.88. Get out your calculators. The answer is 72. Now, a little quick math tells you if I have a target of 72 and at the same time I have risk of 36, that means I have a 2 to 1 target and a 4 to 1 target for Aussie New Zealand. All right. So entry 103.88, stop 103.52, target 104.60, and second target 105.32. There's still something missing. That something is this. When am I going to move the stop? Because I really do, I mean, obviously if the trade starts going in my favor, then I definitely want to move the stop. That's for certain. Okay, beautiful setup. Now, the only thing that's missing is when do I move the stop? I'm going to move the stop for sure. If I haven't already moved it, I'm going to move it when I'm 1-to-1. So if I have a 36 pip stop, that means when I'm profitable by 36, I'm going to move, that's when I'm going to move the stop higher. But if I'm profitable by 36, the stop has to come up to break even. Now, that's not a target. That just simply means that's where we eliminate the risk. So, at what point am I profitable by 36? Well, looks like I've got to add 88 plus 36. And I think that's going to give me 10. You know something? 88 plus 36.
It's 124.
Okay, so 104.24 is the point at which we will bring the stop higher. 104.24. Because, and the beautiful thing about that is, do you think most people plan that out in advance? Or do they just do it during the trade? They just kind of do what seems like the right thing at the time. Naturally, they just do what seems like the right thing at the time. Most people don't plan out in advance when they're going to move the stop, but it's really important. You see, if you make decisions while you're in the trade, you're compromised. You have emotions from being in a trade, and those emotions will mess with you. They'll mess up your trade, okay? And we don't want that. We can't have that. So, let me make sure we get this out. So, it's AUDNZD, Aussie New Zealand, and it is a long trade setup. I'm just making a note here for myself. So I want to make sure that I put these orders in as soon as I get off with you folks. Okay. All right. There we go. So now we got it. Okay. All right. So what else? We still got a few minutes left. Let's take a look over at the FX Street calendar, and we'll see what's coming up. Now, I already mentioned to you today, earlier during the first, we have William Powell coming up. He is the head of the Fed. Did I say William? I meant Jerome Powell. Jay Powell, head of the Fed, testifying starting in 20 minutes from now. So if you're in the live market right at this moment, you got to be aware of that. Mr. Powell begins speaking about 25-35 minutes from right now. Then also, half hour from now, we have factory orders. Factory orders out of the U.S. expected to rise 1.5%, and new home sales, pending home sales, I should say. Pending home sales just simply means that the contract is signed and we're waiting for the transaction to settle. We're expecting pending home sales to rise by 0.7% in the U.S. Another exciting report coming, as that's all like a half hour. That's all within the next half hour. Then 1 hour from now, we've got crude oil inventories. Now, I'm not in any current Canadian dollar trades. We did a setup on Canadian dollar trade. It missed the entry, so no big deal. But I could set up another trade for Canadian dollar based on this oil report that comes out in 1 hour. So let's go back to dollar CAD. Now, There you see, that was the prior setup, the previous setup, and it did what we thought it would do. It came down and it reversed and came up, and I missed the entry by 2 points. Would I do that again for the oil inventory report? It depends on where the price is. One of the things you might have noticed, and if you didn't notice this, you can go back and look at the first segment we did today and check this out. One of the things you might notice, not only did I use already established support and resistance in this trade, I did something else, right? My support and resistance levels were approximately equidistant, approximately equally distant from the entry from the current price. That would not be true now. If I were to place that trade now, place that order now, I'm much closer to a buy than to a sell. So I would not do it. It depends. If we get to 1 hour from now and we're right back at 131.45, 131.50, I might be willing to give this another try. But it depends what the price is at that time. Based on the current price, I would not do it because my 131.70 order to sell short is too far away, and my 131.15 order to go long is too close. I hope that makes sense, right? So it's not just about picking out support and resistance levels. Those levels should be fairly equidistant from each other and fairly equidistant from the price. The price should be right in the middle, pretty much right in the middle. Okay? So anyway, that's an oil inventory trade. Setup. And that's pretty much going to do it for today. We're about out of time. I really do want to say thank you for joining me. And I will be back next week. We'll pick it up again. We'll see how these trades worked out. Until then, this has been Ed Ponsi saying thank you so much for listening. I'll see you back here again next week on FX Street. Thanks again.